Ladies and gentlemen, K Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down slightly here on the S&P, 0.1% negative, pretty much flat on S&P there. Nasdaq is up a little bit. Semiconductor and the Dow down a little bit there. Small caps did catch a bit. Looks like up 1.3%. Banks, energy, and the transport down a little bit, 0.5% negative each. Biotech did make a move today, 3.5% positive. I think biotech was up almost 5%, positive 5% earlier today, faded a little bit. But, biotech has been struggling in the last couple months. It's good to see that we're seeing a little bit of a leadership on today's price action. Keep in mind also pharmaceutical sector is also up about 2% or so today. Emerging markets down a little bit. Grayscale, Bitcoin down about 5%. Gold, silver, miners up a little bit. Oil is flat. Dollar pretty much flat. Treasury bond down a little bit. VIX is flat. Let's stick with the SPDR S&P 500 ETF 65-minute chart here. So on the weekend analysis, we talked about this was when the market was right on that all-time high level. We talked about should there be any kind of slide going into this coming week. We want to check the prior resistance potentially as new support. Pretty much 420, 421 as potential support level, just because that's, again, prior resistance. And usually prior resistance becomes new support. And that's the reason why you can see that that's the first hour there, second hour, third hour, fourth hour, fifth hour. We stayed right above that 421.18-ish area. And I think this is a good sign that on the last hour, we did see that thrust to the upside, breaking above the micro-term pivot here, right? Holding above this pivot. And we did see that follow through on the 5th hour and the 6th hour with these two candles there. So I expect the continuation tomorrow, even potentially some sort of gap up. Best case scenario for the buyers is gapping up above this all-time high level. That's what I like to call jumping over the fence. So you don't even have to deal with that resistance right here, because we do have the resistance right on that all-time high level here and here. It's been slowing things down right on that all-time high level. That's the supply zone. So gapping it over, jumping over the fence, make things so much more smoother. And it doesn't require a big gap up or anything. It's just 0.2% gap up. It's very much doable. So I think that would be the best case scenario, just gapping it over, or just some big fast bullish rally. They'll just move above it in the first 2 hours and staying above it. And if we see something like that, there's a good chance market is getting ready for 424 and beyond. However, should there be any kind of shenanigan, right? I mean, shenanigan can happen any day of the week, right? Without shenanigan is not a market. As soon as you start trading this market, you signed up for shenanigan, you signed up for fluctuations, you signed up for traps and head fakes and all of those fun stuff that this market gives us. So just market can confuse the hell out of us, right? And something why I talk so much about is if you're confused, if you're not understanding what the market is doing, market is too quote unquote crazy for you, start thinking, focusing on the longer term picture of things and ignoring day-to-day fluctuation. It'll make much more sense. You know what I'm saying? Versus you're trying to focus so much on the micro-term, day-to-day fluctuations, right? So should there be any kind of craziness or something, right? It won't be any crazy though. Even if we see a 1% gap down tomorrow, I wouldn't call that crazy. I'll just call that a normal market fluctuation. But let's say there's some kind of shenanigan happens, we want to watch for 420, 420 on ish area as a first level of support. Let's say things just really, really get hectic. I don't think it will, but let's say it does. We got some of these levels prior resistance level is going to provide some support there. And again, should there be any steep decline going into this week, let's just say if we do see something like that, bulls want to make sure to protect at least half of this gap, right? You can see this, there's this gap here, and there's a second, or this is a whole one gap. But it's better if there's some kind of a downturn, bulls to protect part of it, so that way the momentum can continue to the upside. I'll prove it to you here real quick. You can see right here. right? There's this gap. Do you see this gap? That was opened up in May 24th, right? And then market kind of zigzag, kind of slightly got up here. We saw a big gap up and then it tanked and then we saw a gap down. And then you can see on this day, right? On this day back in June 3rd, I think the market was down as much as 1.5%, including the gap down. And you see that lower wick here? What happened was during that day on that first hour intraday, this thing looked pretty ugly. Looking like the long red candle here, and everybody's getting all scared and freaking out. All these short-term traders putting too much attention to short-term fluctuations, not understanding overall trend, and not understanding the teaching of the gap, right? So the gap wasn't fully filled. You can see only about half or 40% of that gap was filled here. But this gap remained open. And then you see that first hour, we saw the buyers coming in through that Dragonfly Doji there, follow through, gap up, all-time high, just all in 2 days. So what I mean by that is the gaps will provide cushion. So as of today, it doesn't look like we're not going to see any kind of shenanigan, but none of us know when the shenanigan will come. So just to equip you for shenanigan to come. If we do see a shenanigan, you want to watch out for bulls making sure that at least to protect a part of it so we can see the momentum continuing to the upside. But everything looks, as far as the price action is concerned, everything looks like we're ready to make new all-time highs. So let's check out that oscillator and see if we can extract any more information. So the oscillator here, it looks like oscillators giving us a little bit of different opinions. Oscillators actually crossed, and a lot of people potentially can view this as bearish thing, and normally it kind of is. However, in this scenario, we talked about this in the weekend analysis video that we potentially be doing this, potentially be doing that. We got that little higher low there, and that's a little reset before a rally that could last for about a week or so. I think we may see something like that. Sometimes history rhymes. So maybe it might not look exactly the same, though it could, but it looks something similar. Maybe this time we'll throw you a little bit of shenanigan just to get you out before making a move. I don't know, but I think overall trend says we want to give benefit of the doubt to the buyers. The price is now back above the short-term moving average, as you can see right here, right? The price is above my short-term moving average. Price been cultivating these short-term, micro-term higher lows, higher highs, getting ready for maybe new all-time highs. I want to give benefit of the doubt to the buyers in all terms. Oscillator, I think, is just needed to reset for the next push to the upside. You guys enjoy the rest of this evening, and good luck trading tomorrow.